welcome back to Economic Simplicity. Today, we're going to be going over a topic that you've probably heard on the news or read about in a financial article or journal. This is the Dow Jones Industrial Average, sometimes just called the Dow. Well, what is the Dow? What does that mean? By the end of this video, you'll understand what the Dow is and why it plays such an important role in the financial world. So, let's get started. What is the Dow Jones Industrial Average? The Dow Jones Industrial Average, often referred to as the DJIA, is one of the most well-known stock market indices in the world. Created by Charles Dow and Edward Jones in 1896, it serves as a barometer of the overall health of the U.S. stock market and, by extension, the U.S. economy. Historical background. Originally, the Dow consisted of just 12 companies, primarily in the industrial sector, hence the name. Over time, the index has evolved and now includes 30 significant publicly traded companies across various industries, not just industrial. Purpose of the Dow. The primary purpose of the Dow is to provide a clear snapshot of the market's performance. It does this by tracking the stock prices of 30 large publicly owned companies in the United States. When people refer to the stock market being up or down, they are often talking about the movement of the Dow. How is the Dow calculated? Unlike some other indices that use a market capitalization weighted calculation, the Dow uses a price-weighted formula. This means the index is calculated by adding the prices of all 30 stocks and then dividing by a divisor. The divisor is adjusted periodically to account for stock splits, dividends, and other factors that might distort the index's accuracy. The divisor is a critical component that ensures the Dow maintains consistency over time. Without this adjustment, events like stock splits would cause significant and misleading changes in the average. As of recent updates, the divisor is a number less than 1, meaning the sum of the stock prices is divided by a fractional value to get the average. Imagine you have a basket containing 30 apples, each with different prices. To find the average price of the apples, you'd add up the cost of all apples and then divide by a special number. The divisor, that takes into account any price changes or new apples added to the basket over time. This gives you a more accurate representation of the basket's overall value. The Dow's 30 components are chosen to represent a diverse cross-section of the American economy. These companies are leaders in their respective industries and have substantial influence on the stock market. Some of the big names include Apple, Microsoft, Nvidia, and Coca-Cola. Criteria for inclusion. 1. Reputation. The companies should have an excellent reputation and sustained growth. 2. Industry. They must represent a significant portion of the U.S. economy across a variety of industries. 3. Market performance. The company's stock should be a leading performer in its sector. Review and changes. The list of companies in the Dow isn't static. The index committee reviews the components periodically and may replace companies that no longer meet the criteria with those that do. This helps ensure that the Dow remains a reliable gauge of U.S. economic health. Significance of the Dow. The Dow is often seen as a gauge of the U.S. economy's health. A rising Dow generally suggests that investors are confident about the future of the economy. Conversely, a falling Dow can indicate economic trouble. However, it's crucial to note that the Dow only includes 30 stocks, so it doesn't capture the entire market's performance. The Dow often reflects investor confidence. When the Dow is up, investors are typically optimistic about economic growth and corporate profits. The Dow is frequently cited in news reports as a shorthand indicator of stock market health. It helps the general public understand the market's daily movements in a simplified manner. Many investors and financial professionals use the Dow as a benchmark for portfolios or mutual funds. Seeing how well investments stack up against the Dow can offer insights into their performance. Despite its prominence, the Dow has faced criticism for several reasons. First, limited scope. With only 30 companies, it doesn't represent the entire market. Second, price-weighted. Critics argue that a price-weighted index isn't as effective as a market capitalization-weighted index in representing market movements. Third, selection process. The subjective nature of selecting the 30 companies can lead to bias. In summary, the Dow Jones Industrial Average is a vital indicator of the stock market and economic health in the United States. By tracking the performance of 30 prominent companies, it provides insights into investor sentiment and economic conditions. However, while the Dow plays a significant role, it's also essential to consider other indices like the S&P 500 and the NASDAQ Composite for a more comprehensive view of the market. Thank you for joining me today on Economic Simplicity. I hope this video has demystified the Dow Jones Industrial Average for you. Don't forget to like, share, and subscribe for more straightforward explanations of complex financial concepts. Until next time, happy investing.